Hey everyone, thanks for tuning in. In this video, I want to go over a short trade that I made a few days ago. Now, obviously, as a trader, you are always looking for new opportunities in the market, and this particular price action caught actually my attention based on its technical and other structural factors. So throughout this video, I will go into as much detail as I can about why I decided to enter this trade, what elements I used to make my decision, and how I managed my risk throughout the trade. Whether you are just starting out as a trader or are an experienced player, I hope that this video will be useful in some way to improve your trading skills. So let's begin analyzing this short entry. So starting with this 1 minute time frame, we can see that following a 45 point dump and the establishment of a temporary bottom, the market goes through a gradual uptrend before retesting the top of a 15-minute order block, which, as you already know, serves as an important price level where buying and selling pressure usually occurs. In reference to this price movement, I say gradual uptrend because, as you can see in the chart, there have been occasional pullbacks and periods of consolidation along the way, but the overall trend has clearly remained bullish. Now, had the price broken through the 44.30 level, which marks the ceiling of the order block and gone higher, it would have indicated the beginning of a bullish move and potentially trigger a buy signal. However, and as I've always stressed in my videos, it's important to wait for confirmation or confirmations from your setup and other technical elements before making any trading decision. And as the chart shows, after being in an uptrend for more than 45 minutes, the market retraces. In fact, judging by these capitulation bars, it's more like the market nosedives as sellers move in. So the market retraces to the downside from its initial position, prompting a break in its structure below the 44.10 level. Obviously, this move leads to a further drop toward the 44.05 area. The market then rebounds from the range's initial drop, but, and as you can see in the chart, it was not able to recapture the order block's high, and as a result continues to show a weakness with another downward reversal. Now, as we move to this section of the chart, you can see that the price movement on this second upward attempt, which forms an ascending channel, has been clearly minimal in terms of when you compare it to the previous two. Additionally, the price action in this zone is mostly sideways with occasional lows and highs, forming a trading mini range without a clear trend in either direction. My point here is that despite the formation of an ascending channel, these lower highs here could indicate a potential weakening of the buying pressure in the market. And what that means, always in my view here, is that although the price is increasing overall within the channel, there might not be enough demand from the buying crowd to further increase the price. Also, when you consider indicators such as trading volume and market sentiment, you'll see that the current trend's strength is weak. In other words, you'll see decreasing trading volume during an ascending channel, which could indicate that fewer market players are interested in buying the asset at its current price. Obviously, as you can see, I forgot to include the volume indicator in the video, but I think you get my point. Now, again here, guys, there could be some begging and filling within the channel, but I would stay with my bearish bias as long as the channel's top line holds. At the same time, my plan is to enter the market short only if the price breaks below the 44.16 support level of the channel. This drop in price and subsequent breach of the channel support may be seen I think, as a bearish signal for the short term, since I do think it does indicate that there is enough selling pressure to keep the price from rising any further. Keep in mind, guys, that while ascending channels are often viewed or perceived as a sign of strength, they can also be a potential indication of weakness. As I previously mentioned, in an ascending channel, the price of an asset is trending upward, but within a well-defined trading range with lower highs and higher lows. Now, this pattern can occur when buying pressure in the market is not strong enough to push the price significantly higher and may reflect a lack of overall demand for the asset. Additionally, if the top or the upper boundary of the ascending channel is repeatedly tested but not broken, it could indicate that bears are entering the market at that particular level and pushing the price downward, creating in the process a strong resistance to further price increases. This could reflect hesitation or a lack of confidence among traders to support the price at that specific level. In such cases, what you should do is you should carefully monitor the market and look for other technical elements and fundamental factors that may suggest a change in the trend before entering any trades. Again, guys, confirmations are the way to go in this game. All right, price just broke below the 40.15 level, so I'm gonna go ahead here and place my short entry.
Order submitted. Order filled.
I want to point out the placement of my profit targets. The first one is set where the market structure got broken, and the second target aligns with a support zone of 44.07 in the range.
Target filled.
Alright gang, that should do it for today. If you liked the video, I would appreciate you taking 2 seconds of your time to leave a like and subscribe. Thanks for watching, and as always, I'll catch you all in the next one.
Target filled.